The Monetary Policy Committee of the Central Bank of the Gambia convened its first quarterly review of domestic and global economic conditions for 2025 at its headquarters in Banjul. The objective of the meeting was to assess key economic development both within the Gambia and globally, determine policy interest rate, and highlight crucial economic indicators that influence the MPC's decisions. Following the meeting, Central Bank Governor Buha Seydi outlined the committee's decision and provided insights into the country's economic outlook. He addressed key issues such as inflation trends, exchange rate stability, interest rate, and overall economic growth. Governor Seydi emphasized that the MPC's decision will play a crucial role in shaping financial and economic policies to maintain stability and foster sustainable development. The committee announced its decision to keep the monetary policy rate unchanged at 17%. Governor Seydi provided an overview of the discussions that lead to this decision.
Global economic growth remains stable, underpinned by declining inflation and easing monetary policy in advanced economies. The International Monetary Fund, IMF, in its January 2025 World Economic Outlook update, revised global economic growth projection upwards to 3.3% for 2025. Reflecting stronger than expected activity in the United States and a moderately recovery in China. The OECD and World Bank also anticipated steady, moderate growth for 2025. However, escalating uncertainties linked to trade protectionism and geopolitical tensions pose significant risk. This could undermine business and consumer confidence, disrupt global supply chains, and dampen investment and trade flows.
On commodity prices, he noted that the World Bank projects global commodity prices to slow to 6.0% in 2025 before declining further to 2.0% in 2026.
Global disinflation continued, but progress is slow. The IMF projects global inflation to decline from 5.7% in 2024 to 4.2% in 2025 and further to 3.5% in 2026. Nevertheless, divergence remained, with advanced economies projected to reach their inflation target sooner than emerging markets and developing economies. In sub-Saharan Africa, inflation is expected to decline at a slightly faster pace in 2025, but will remain higher than earlier projected in 2026. On commodity prices development, the World Bank projects global commodity prices to decelerate to 6.0% in 2025 before falling to 2.0% in 2026. This is largely on the back of improved supply conditions for energy and food commodities, despite ongoing geopolitical tensions. However, despite this sustained downward trend, most commodity prices remain volatile and are significantly above pre-pandemic levels, posing an upside risk to the disinflation process.
Regarding government fiscal operations, preliminary estimates for 2024 indicate that despite strong revenue performance, the overall deficit widened. The overall deficit excluding grants increased from 17.1 billion, 11.9% of GDP in 2023, to 18.9 billion, 13.2% of GDP in 2024.
The Central Bank's Business Sentiment Survey for the fourth quarter of 2024 indicated an improvement in business sentiment on the prospects of the Gambian economy. Majority of respondents expect economic activity to grow in the next 3 months, indicating favorable near-term outlook. Although inflation expectations remain elevated, respondents expressed optimism that inflation will continue to moderate. Preliminary balance of payments estimates indicate a moderate improvement in the current account balance in 2024, supported by a rebound in tourism, private remittances, and official inflows. The current account balance moderated to a deficit of $74.4 million US dollars, or 3.2% of GDP in 2024, from a deficit of $120.1 million US dollars, or 5.5% of GDP in 2023.
He also highlighted that domestic price pressures are easing despite short-term fluctuations in inflation. As of January 2025, headline inflation remained steadily at 10.2%.
The overall deficit, excluding grants, increased from $17.1 billion, or 11.9% of GDP reported in 2023, to $18.9 billion, or 13.2% of GDP in 2024. Similarly, the overall budget deficit, including grants, increased to $6.7 billion, 4.7% of GDP in 2024, compared to $5.1 billion, or 3.5% of GDP in 2023. The stock of domestic debt rose by 12.2% to $46.4 billion in 2024, from $41.3 billion in December 2023. However, the ratio of domestic debt to GDP declined from 28.2% in 2023 to 26.9% in 2024.
The MPC further observed that global economic growth remains stable despite persisting uncertainties, supported by easing inflation and a gradual shift towards less restrictive monetary policies. While commodity prices remain volatile in 2025, they are generally expected to trend downward throughout the year. However, ongoing geopolitical tension and rising trend protectionism continue to add uncertainty to global commodity markets and inflation control efforts. The next Monetary Policy Committee meeting is scheduled for Wednesday, May 28, 2025, followed by the policy decision announcement on Thursday, May 29, 2025. Reporting for Kerfatu, I am Ramatulai Jao.